So you're in Canada and you're trying to navigate the world of trading. You've got traditional stocks on one side and this wild new frontier of crypto on the other. But here's the thing, they operate under completely different rulebooks. In this explainer, we're going to break it all down. The key differences, why some of the biggest crypto exchanges in the world are actually banned here, and how you can pick the right platform for your money.
You see it all the time. On one side, you've got the Toronto Stock Exchange, right? The bedrock of Canadian finance for generations. And on the other, you have the lightning fast world of crypto platforms. They both let you invest, sure, but they are playing a very different game. So what are the rules of that game, and how do they actually impact you and your investments? All right, here's our game plan. First, we're going to dig into the official rulebook that governs the traditional stock markets. Then we'll meet the key players in both stocks and crypto. After that, we'll get into the juicy stuff, why some huge crypto exchanges got kicked out of Canada, and we'll wrap it all up with a super practical guide to help you choose the right platform. Okay, so to really get what's going on with crypto regulation in Canada, we have to start with the basics. We need to look at the rulebook for the old school stock exchanges. Believe it or not, these rules are the foundation for everything that's happening right now in the world of digital assets. At the end of the day, what does the Canadian government really care about? Protecting investors. It's that simple. When you put your hard-earned money into an RRSP or a TFSA, the regulators want to be absolutely sure that it's going into a market that's stable, transparent, and properly managed. This isn't just red tape, it's about making sure your financial future is secure. And that brings us to this really important term, a designated stock exchange. You could think of this as the government's official seal of approval. Getting this designation is a massive deal because it means that the stocks and the ETFs listed on that exchange are actually eligible to be held inside your most important accounts, like your RRSP. So how does an exchange get this gold star? Well, it really boils down to three main things. First, you have to be a real functioning exchange. You've got to handle the whole shebang from listings to trading. Second, and this is huge, you must have rock-solid protections for investors. And third, you need to have a proven track record. We're talking financial stability and experienced people at the helm. These three pillars are everything, and you're going to see they're at the very heart of the crypto debate in Canada. Okay, so let's meet the old guard. These are the established players who live and breathe by this strict rulebook. They are the designated stock exchanges that form the very foundation of Canada's markets, and as you'll see, each one has its own special role.
It's not a one-size-fits-all situation. The TSX, that's where you find the big dogs, the country's largest, most stable companies. Then you've got the TSX Venture, or the TSXV, which is more like an incubator for smaller, high-growth companies. CBO Canada is all about innovation, with things like Canadian depository receipts. And the CSE? They're focused on brand new sectors like fintech and even blockchain. Each one serves a totally different slice of the investment pie.
And now, let's pivot to the main event, the world of crypto. This is the new frontier, right? This is where these digital platforms are trying to figure out how to play within Canada's very established, very strict regulatory system. One of the very first things you'll notice in the crypto world is just how different every platform is. It's not like the stock market. The number of coins you can buy varies wildly. You've got Kraken over here offering more than 400 different cryptocurrencies. Coinbase has around 250, and then Wealthsimple takes a more curated approach with about 100. This variety is pretty cool because it caters to all kinds of different investors. Let's start with a name that pretty much every Canadian knows, Wealthsimple. They've really carved out a unique space for themselves as the all-in-one platform, letting you manage your stocks and your crypto all in one single clean account.
The real magic of Wealthsimple is that blend of simplicity and compliance. They've got a decent selection of cryptos, an app that's super easy to use, and they even offer staking, which is basically a way to earn rewards on your crypto. But here's the most important part. They are fully registered with all the key Canadian regulators, from FINTRAC to the Ontario Securities Commission. They're playing by the rules.
All right, next up is Kraken. These guys are one of the oldest, most respected names in the entire crypto world. They're a perfect example of a big international player that has actually been in Canada for a long time, since 2011, and has figured out how to work within our system. So what's Kraken's big appeal? Options, and lots of them. We're talking a massive selection of over 400 coins, plus advanced trading tools for the more experienced investors out there. They've also got really competitive fees. And just like Wealthsimple, Kraken has done the hard work to get fully registered and compliant in Canada. This proves that big global companies can operate here if they're willing to follow the rules. So this brings up the million-dollar question, doesn't it? If platforms like Wealthsimple and Kraken can operate here legally, why on earth have some of the biggest crypto exchanges in the world been forced to pack up and leave Canada?
Let's just address the elephant in the room, Binance. For a while there, it was the biggest crypto exchange on the planet. So what happened? Why did they just suddenly pull out of Canada in 2023?
Well, according to Binance themselves, new rules from Canadian regulators just made it impossible for them to stick around. They specifically pointed to new rules around stablecoins. Those are cryptos pegged to something stable, like the US dollar, and new limits on investors. So what exactly were these rules, and why were they such a deal breaker? Okay, this right here is the absolute heart of the issue. Canadian regulators looked at a lot of crypto products and said, hey, wait a minute, these aren't just digital coins, they're securities. And a security is basically an investment contract. The moment you call something a security, it has to follow all of Canada's super strict investment laws, and that changes the entire game. And one of the biggest, stickiest new rules was this thing called the net buy limit. This was purely a protection measure. Regulators got worried about everyday investors pouring way too much money into super speculative, really volatile crypto assets. So they put up a guardrail. And that guardrail is a $30,000 annual cap on how much you can invest in these so-called restricted tokens. Now, it's really important to note, this limit does not apply to the big ones like Bitcoin or Ethereum. But for an exchange whose whole business model is built on offering hundreds of smaller, riskier tokens, this regulation was a massive roadblock. Okay, we have covered a ton of ground. So, with all of this information, how do you actually choose a platform that's not just right for you, but is also operating completely above board here in Canada? Let's put together a quick checklist. First things first, and this is totally non-negotiable, check the platform's regulatory status. Make sure it's registered with FINTRAC and with your Provincial Securities Commission. Done? Okay, next, look at their security. Are they using cold storage? Can they prove they have the reserves they claim to have? Then you can get into the practical stuff. Compare the fees, see if they have the coins you want, and finally, double check that the platform is actually available where you live. So let's just boil this all down. Stock exchanges in Canada? They're mature, stable markets with decades of rules to protect investors. Crypto exchanges? They're the new kid on the block. Dynamic, evolving, but now being brought under a very similar regulatory umbrella by agencies like the CSA and FINTRAC. And that has led to brand new protections, like that net buy limit we talked about. And this all leads us to one final really big question for the future. You've got traditional finance rules being applied to crypto, and you have big banks getting into the crypto space. The lines between these two worlds are getting blurrier every single day. So as this continues, will we eventually reach a point where there's no real difference between a stock exchange and a crypto exchange? I guess only time will tell. Thanks for tuning in.